This conference will now be recorded.
Hey there, it's Trisha with Easy E-mini Trade, and I just want to show a few examples of the new time-based setup. I did the webinar last week, so many of you are still trying to get familiar with it, so I thought that you might find this helpful. So I'm going to give you some examples from YM from yesterday, Thursday, and then if you have any questions, feel free to shoot me an email. If you weren't able to attend the webinar, the recording is still available. If you go to my site, easyeminitrade.com, you'll see the link at the top that says webinar recording, and you can access the information from there.
This conference will now be recorded.
Okay, so you're looking at YM on a 1-minute chart from yesterday. This is Sierra. You're going to find that we're going to have slight differences from platform to platform. That's just how it is, you guys. So, just trade what you see on your charts and you'll be fine. All right, so right here, you can see that we're getting below the super trend stop. This is before the open. So open right around here at 9:30. So nothing really to do here. You can see that it's attempting to get through the top end of the super trend stop here. And the stochastic doesn't agree for the buy, so we won't be interested in that. The difference between this and the slinky setup are the settings on the super trend stop, as well as the fact we don't have to wait for the bar to close like we do on the range charts. And the stochastic is the same. So few slight differences, and you can trade it on a 5-minute chart or whatever size time-based chart you want to trade. Obviously, larger the chart, the larger the stop. So nothing to do here for the buys as it's trying to get above the super trend. Let's say that at some point, as it's trying and trying and trying, the stochastic does get in line like it does right here. You can see it gets in line right here, green above the red. You could take that as a buy, and it's still valid until price closes above the super trend and the super trend starts to plot on the opposite side. You're going to find that the super trend only plots on one side of the price or the other, and that's what this indicator is here with the little squares on it. So with this setting up for the buy right here, I wouldn't be too interested in it. It's pretty sideways still at that point. It hasn't really picked a direction off the open, and that's the 90 EMA above you. I have the 30 EMA on here. That's the other difference between this and the slinky. The 30 EMA is going to be helpful when there is a slope on it. If the market's sideways, you don't really need to pay too much attention to it, or you can decide how much room you have up to those moving averages, because they can tend to hold when we do have a direction. And right here, you can see price getting above the super trend right here. So this would be valid, and because we're green above the red here. And I've got room up to that 30 EMA, so I could put my buy here at a couple ticks above the super trend stop, let's say 74, 75, knowing that I might get stuck up here around 90, and then I've got the pivot point up there at 496. And then generally round number of 24,500. That general vicinity will likely get a reaction. So, you can manage however you like. And then using the volume at price that you see over here will be very helpful as well to see the congested areas if you have trouble spotting them just looking at price bars. But you can see right here coming into resistance, it was support back here, right? So you would assume on this move higher here that this would likely be a reaction area because of it reacting there before. Here you get below the super trend right here, and you can see the stochastic not quite in line for the short, so that's a pass. Here we are in line for the buy. It's actually valid. It's like crossing over right at the same moment. So you could put your buy a couple ticks above the super trend stop. And on YM, I'll use 2 or 3 ticks above. On NQ and ES, you can use 1 tick above. So you don't have to wait for the bar to close. You could just put your order there if it's valid. So you put your order in at, let's say, 480 area. And once again, resistance is up in this area here around the 500 to 512 area. So that would be your area where you'd be looking for a reaction. And then your surprised when it can keep popping on through. So depending on how you manage that, obviously, you could have trailed it all the way up to, this move higher. Totally up to you how you manage it. That is always the harder part. Here we get a short as it's breaking the super trend right here, and it's not valid because we're in overbought here. So you can always look at your smaller charts to still take an entry. Like let's say you want to take you're not getting an entry off the 1 minute. Likely if you're looking at a range chart using the Slinky, you're going to get an opportunity there. So this is just one more way to get into the market, especially if like the range chart, if you're using that and the market's moving very quickly. Here we get a buy. It's not quite valid. We're in oversold here. And then you can see it holding these 3 moving averages here for a little while. Here we're trying to break through. It's not valid as it's trying to break through because you can see the green above the red. Now, during the webinar, I was looking for a good example of this, and I still don't really have one, but you could see it attempting to break through here, break through here, break through here. So while this is still trying to break through the super trend stop and the super trend stop hasn't been closed below in this case, and let's say then the stochastic becomes in line for the short, then you can still take the entry. And this one was borderline. I actually think it was valid because I think we were watching it at the time in the room. So you'd likely enter in around 516. This we know is support around 500, so you look for a possible reaction there at 500, and then you can see high volume area over here. That would be your next reaction area. And then over here, you could see this area of support, and that's where you'd be ultimately looking for a reaction as well. So it can get hung up on any one of those spots. Here, as it's trying to break the super trend right here, we're not valid because the green's not above the red, but you could see super trend stop still there intact, and by the time we get above it, it is valid. So anytime the stochastic gets in line for the buy in this case, so let's say on any of these bars here and we wanted to take it. Now, of course, this is in the resistance, so I'd pass on it, even though it does go on to eventually work out. But anytime that your stochastic gets in line here and the super trend is still there, you could put your buy a couple ticks above. If this is in a better area, definitely we'd be interested. So if you're using the 30 EMA, more relevant when there is a strong slope to it. So if you're going to take a short, ideally it would be nice if you were entering in below that. And then if you're trying to take a buy, ideally it would be great if you're entering in above it or having room to it. If the market's sideways, again, it doesn't really require anything from the 30 EMA. And you're going to find that there will be times that you'll use it and times that you won't. So sideways, it's not likely going to be an issue because you'll find that it will not have a very strong slope. It's when you get like a strong slope on it that it tends to react. Let me see if I can find an example here for you. This is the afternoon, so I wasn't trading, but let's see if any of these were valid. So this short right here, not valid right here because of our stochastic. And here, it's valid, but we're literally on that 30 EMA. But if we put our order in a couple ticks below the super trend stop, we're actually under it. So I'd be okay with that one there. And then I would just look at the high volume areas as a reaction here, here. And then, of course, when you have the 90 to 200 right there, you might get a little stall there. And if it can't get through, then it's going to bounce back up to resistance. But here's a good example. Once you get like a stronger slope on it, that 30 is the white one, you'll see that price will generally retrace and hold it like this and retrace and hold it like that. So that's when you're going to find that it's a little bit more relevant in expecting it to hold. Okay, so I hope that you guys find that helpful. And if you have any questions, please feel free to shoot me an email. And I hope that this helps a little bit. Have a great day.